Every trader starts with the same dream: freedom, wealth, control over time. Yet behind every flashing chart and every confident click lies a harsh truth: most never make it. The Forex market is the largest arena on earth, trillions changing hands each day, and still the majority of players lose. Why? Because they chase the wrong strategy, or worse, no strategy at all. For years, the industry has whispered the same question: what is the best trading strategy in Forex? Not the flashiest, not the loudest, the one that actually works. The one that can turn knowledge, patience, and skill into consistent results. Today, we uncover that truth. Imagine standing at the edge of a global battlefield, currencies rising and falling like tides, driven by interest rates, geopolitics, and pure human emotion. Somewhere in that chaos hides an edge, small but powerful, that separates the disciplined from the desperate. This story is about finding that edge. Let's start by breaking the illusion. Most retail traders believe success lies in speed, scalping the market, reacting to every tick, chasing momentum. But every data-driven study says otherwise. The faster you trade, the greater your cost, your stress, your mistakes. Over 90% of intraday traders lose money over time. The market rewards the patient, not the frantic. To understand which strategy works, we must travel back. Decades before flashy platforms and social media gurus, institutions built systematic models to trade currencies based on logic, mathematics, and probabilities. They weren't guessing, they were testing. Trend following, carry trades, mean reversion, each born from data, not emotion. Those models quietly compounded profits for years while retail traders kept gambling on noise. Trend following was the original giant. The principle was simple: buy strength, sell weakness, and let the trend do the heavy lifting. It worked because markets reflect momentum, currencies that rise often keep rising until something breaks. Traders who mastered this learned to hold for weeks, sometimes months, ignoring the temptation to overtrade. It wasn't glamorous, but it was effective. Then came the carry trade, slower, steadier machine. Borrow in low-interest currencies, invest in high-interest ones, and collect the difference. For decades, it produced steady returns until market shocks, like the global financial crisis, reminded everyone that easy yield comes with hidden risk. But still, over the long run, it remained profitable for disciplined players. Swing traders emerged in between, those who lived between momentum and mean reversion. They sought the balance, capturing shorter-term moves lasting days instead of months. They relied on technical levels, sentiment shifts, and macro triggers. Theirs was the art of timing. Many found success. Many lost it chasing too many setups. Meanwhile, day traders and scalpers flooded the scene. Armed with leverage, caffeine, and hope, they tried to beat algorithms at their own game. But the numbers never lied. Transaction costs, slippage, and emotion devoured their profits. They weren't traders. They were gamblers in disguise. The data showed that fewer than 5% of them lasted more than a year. And then technology changed everything. Algorithms, automation, AI, the modern evolution of systematic trading. Now machines could scan thousands of pairs, test thousands of strategies, and execute without fear or fatigue. The best human traders learned to think like machines, combining analysis with discipline. The worst tried to copy signals they didn't understand. Once again, the edge returned to those who treated trading like a business, not a bet. Here's the insight most ignore: no single strategy works all the time. Trend systems win in directional markets. Mean reversion thrives when volatility compresses. Carry trades flourish in stability and die in crises. The secret isn't picking one, it's knowing when each has the advantage. That's what separates professional strategy design from retail trial and error. At Traders MBA, we teach that trading is not prediction, it's probability management. The best strategy doesn't guarantee profits, it guarantees consistency of process. And process is the foundation of profit. When you trade like an analyst, not a gambler, you stop reacting to noise and start adapting to structure. So as we begin this journey, remember, the goal isn't to find a magic formula. It's to build a method you can trust when the market turns against you. Because it will. The best traders aren't right more often, they lose better. They survive the storm because their system was built for it. Every trading strategy tells a story. Behind every chart, every position, and every decision lies a philosophy about how markets move. Let's explore the main contenders and see which ones truly stand the test of time. First, the trend followers. They live by one rule: the trend is your friend until it ends. They don't fight the market, they ride its momentum. When central banks diverge, when economies shift direction, trend followers are already in position. They make their money by being patient, not by predicting reversals, but by holding winners long enough for compounding to take over. The data supports them. Across decades of research, trend following in major currency pairs has produced modest but steady returns, around 4 to 5% annually, with Sharpe ratios close to institutional grade. It doesn't sound flashy, but in a world where most traders lose money, steady profit is power. The catch? You must survive the long, painful drawdowns when markets churn sideways. Trend followers bleed small losses until the next big wave appears. It's a strategy built on discipline, not dopamine. Next, the carry traders. They're the quiet investors, earning while they wait. They buy currencies with high interest rates and sell those with low rates, capturing the interest differential. Over time, the carry trade has been one of the most consistent generators of returns in Forex history. Roughly 4 to 7% per year, sometimes more during stable periods. But stability is a fragile friend. When risk sentiment collapses, the carry trade implodes. The higher-yielding currencies crash, and years of quiet profit can vanish in a week. The lesson? Carry works best when you respect the cycle. You can't hold risk forever in a world that changes overnight. Then we meet the swing traders, the artists of balance. They blend the structure of trends with the reflex of mean reversion. They hold positions for days, sometimes weeks, waiting for markets to move from one equilibrium to another. Swing trading rewards analysis over speed. It doesn't require staring at screens all day, but it demands timing. Too early, and you suffer drawdown. Too late, and the move is gone. Successful swing traders know that entries don't make money, exits do. Now to the day traders, the most misunderstood of them all. Every forum glamorizes them as warriors of volatility, making thousands of micro-decisions, scalping ticks from chaos. But in truth, most day traders lose. Studies show their average return hovers around zero, often negative after costs. They're not unskilled, they're outgunned. Competing against algorithms that see the market in microseconds, retail day traders are fighting Formula One machines on foot. The human mind wasn't built for that pace. For a few rare talents it works, but for most, it's a path to burnout. Scalping takes it further, a frenzy of split-second trades chasing tiny profits. It feels alive, intoxicating, even addictive. Yet the spread, the commission, and human error erase the edge. The math just doesn't add up. The truth hurts. The market doesn't reward noise traders. It rewards those who wait. Breakout trading sits somewhere between discipline and danger. It's the thrill of catching a price explosion at the very moment it begins. When breakouts work, they deliver huge gains fast. But when they fail, they punish hard. False signals are common. Emotion runs high. Breakout traders learn to live by statistics, 50-50 win rates, asymmetric reward. It can work, but only when filtered with strong confirmation like trend strength or volume expansion. Without that, it's guesswork with better lighting. And then comes the mean reversion strategist, the contrarian. They bet on one thing, that every extreme will eventually fade. When markets overshoot, they fade the frenzy, expecting a pullback. This approach thrives in quiet or range-bound conditions. Its win rate is high, often 60 to 80%, but the losses, when trends persist, can be brutal. The smartest mean reversion traders hedge, diversify, and know when not to fight momentum. Done right, it's one of the highest risk-adjusted strategies available, with modern data showing returns near 11% per year and controlled drawdowns. So, which is the best? Not the loudest, not the quickest, the most adaptable. That's where hybrid systems enter. Combining trend and mean reversion signals has quietly become one of the most powerful frameworks in modern Forex trading. Imagine buying strength when it's confirmed by trend data, but taking profit or reversing when prices overextend. Machines do this flawlessly. Humans can too, if they follow rules. The synergy balances offense and defense, momentum for growth, mean reversion for protection. In institutional research, these hybrid systems outperform pure strategies. They deliver higher Sharpe ratios, lower volatility, and smaller drawdowns. For retail traders, they translate into emotional sustainability. You stay in control. You're not forced to choose between chasing or fading. You adapt to what's real. At Traders MBA, we call this intelligent strategy engineering, the ability to shift gears as the market shifts character. One system, many states. It's not about predicting the future. It's about preparing for all of them. Still, strategy alone isn't enough. Behavior decides outcome. You can have the best model in the world, but if fear or greed overrides it, you lose. Every professional knows that trading is 80% psychology, 20% process. That's why systems win, because they remove the human glitch. So let's zoom out. We've seen what each strategy offers. Trend followers catch big moves. Carry traders earn slow and steady. Swing traders find balance. Mean reversion plays defense. Breakouts strike with precision. Each has merit, but only when managed with discipline. The losers aren't the ones with bad ideas. They're the ones without consistency. Every trader begins by chasing profits. The successful ones end by chasing precision. The best strategy isn't a secret formula. It's a framework for survival. Because in Forex, survival is victory. The data proves it. The market rewards endurance far more than aggression. Let's reveal what the evidence really shows. When all the numbers are stripped down, when you remove the marketing and the myths, the most profitable, consistent, and sustainable approach for retail traders in major Forex markets is a hybrid trend and mean reversion system. It wins because it balances momentum with discipline. It captures the upside of trends and the safety of pullbacks. It works because it does what humans struggle to do. It adapts. Decades of backtests and institutional data confirm this pattern. Trend alone yields moderate gains but deep drawdowns. Mean reversion delivers high win rates but can crumble in runaway markets. Combined, they offset each other's weaknesses. One thrives in motion, the other in correction. Together, they form equilibrium. That's what trading is, a search for equilibrium in chaos. This is where most traders fall. They cling to one idea, one method, one belief that used to work. But markets evolve. Liquidity shifts. Central banks change direction. Volatility cycles reset. The market doesn't care what you want to work, only what actually does. That's why the pros don't just trade strategies. They trade behavior. They adapt process faster than price adapts trend. At Traders MBA, we teach that edge isn't found, it's engineered. You take principles proven by data and shape them into rules you can execute without hesitation. You manage risk before you manage reward. You stop asking, how much can I make? And start asking, how much can I lose and still be here tomorrow? That's how professionals think. The hybrid approach embodies that mindset. You follow the trend when momentum is clear, aligning with policy divergence, macro flows, and market sentiment. When momentum fades, you revert to defense, fading over extensions, capturing retracements, and reloading only when conditions reset. It's like surfing the tide, not fighting the ocean. You're not predicting the next wave, you're positioning for whichever one arrives first. Retail traders often think institutional success comes from hidden algorithms. In truth, it comes from execution discipline. Institutions lose too. They just lose better. Their systems stop losses automatically. Their traders don't revenge trade. Their portfolios are diversified across currencies, time frames, and signals. Retail traders can do the same. Simpler, smaller, but just as structured. So what does this mean for you sitting behind a screen somewhere, maybe with a cup of coffee and a dream of financial independence? It means this: you don't need to reinvent trading. You need to simplify it. Build a rules-based system that uses both trend logic and reversion logic. Test it, trust it, and execute it. You'll be ahead of 90% of traders immediately, not because you're smarter, but because you're consistent. There's one more truth professionals never tell beginners. Profitability comes from boredom. The best traders are not adrenaline junkies. They are process engineers. Their trades are repetitive, structured, almost mechanical. They find beauty in discipline. Excitement is for gamblers. Consistency is for winners. Now think about what this journey means beyond charts. Trading isn't just about markets. It's a mirror. Every bad habit, every emotion, every impulse you have, the market exposes it instantly. Master trading, and you don't just master finance. You master yourself. That's why the hybrid strategy matters. It's not just mathematically strong. It's psychologically sustainable. It lets you breathe. It gives you rhythm. It keeps you in the game long enough for compounding to do its magic. The goal isn't to double your account overnight. It's to be here in 10 years with discipline, experience, and capital intact. And maybe that's the greatest revelation of all. The best Forex strategy is not about predicting the future. It's about surviving the present. Because those who survive the present own the future. If this message resonates with you, share it. Because thousands of traders out there are still searching for shortcuts that don't exist. Let's change that. Spread the truth. Help others trade smarter, not louder. And if you're ready to take your understanding to the next level, explore the courses and insights at Traders MBA. Learn how real professionals think, how they build systems, and how they manage risk like institutions, not influencers. The link's in the description. You can keep chasing signals, or you can start mastering structure. The choice defines your future. Because the market doesn't reward emotion, it rewards evolution. This is the evolution. This is Forex mastery. Stay disciplined, stay data-driven, and as always, trade smart.